Welcome to the Opening Bell Report.
All right, let's just jump right into this because looking at the charts from February 2nd, I mean, something absolutely wild happened.
Yeah, that's one way to put it.
We aren't just talking about a good day here. We're talking about a massive, like a violent repricing event.
It was a violent repricing event.
Aquestive Therapeutics, ticker AQST, didn't just climb, it exploded. It surged nearly 39% in one day.
And closed at $4.10.
Which, for anyone watching the technicals, it didn't just nudge past resistance.
Yeah.
It completely smashed through that $3 ceiling.
Oh, it obliterated it.
Ugh.
And moves like that, they usually signal a fundamental shift in reality, not just hype.
Right.
When you see a stock panic upwards like that, with that kind of volume, the market is basically saying, we were wrong. We need to fix the price right now.
Exactly. It's like the market suddenly woke up. So the mission for this deep dive is, well, it's pretty straightforward. We need to figure out why.
What was the trigger?
Yeah, what specifically triggered this? Because on the surface, it just looks like a notification from the FDA. But clearly, based on the analysis report we have, this changes everything.
It does. And the stakes here are incredibly high. We have to remember, we aren't just looking at a stock chart. We are looking at a potential EpiPen killer.
A huge claim.
And a major shakeup in how severe allergic reactions, anaphylaxis, are treated.
Right. And anyone who carries an EpiPen or has a kid who does knows exactly what we're talking about. It's a huge constraint. So this massive jump, what was the spark?
The spark was a waiver. Specifically, the FDA notified Aquestive that there will be no advisory committee meeting required for their lead product, Anaphylm.
Okay, hold on. No advisory committee meeting. I mean, to someone who doesn't follow this, that sounds...
Bureaucratic.
Yeah, bureaucratic. It sounds like a canceled Zoom call. Why does skipping a meeting add nearly 40% to a company's value?
It sounds so boring, I know, but in the biotech world, the advisory committee, or AdCom, is, well, it's terrifying. It is essentially a kill zone.
A kill zone? That feels a little dramatic.
It's not dramatic enough, honestly. Think of an AdCom as a public trial. The FDA gathers this panel of outside experts.
Doctors, statisticians.
Right, consumer reps. And they spend an entire day just picking apart your data. They debate safety, they question efficacy, and it's all in the public eye. Stocks crash during AdComs.
So it's basically the gauntlet. And the FDA just told Aquestive, hey, you don't need to run the gauntlet.
Precisely. By waiving the AdCom, the FDA is signaling something profound. They're saying, we have seen enough. We don't need outside advice to tell us if this is safe.
Wow.
It implies the reviewers are already comfortable with the safety profile of Anaphylm.
That is huge. So it removes this massive hurdle from the timeline.
It removes the fear premium.
Yeah.
This is a key concept from the report. Until this news dropped, the market was pricing AQST with a huge discount because there was a very real risk they'd fail at the AdCom.
Or just get delayed for months.
Or get delayed or get humiliated by a panelist. That risk is now zero. The path to the PDUFA date, the final approval decision, is now clear.
The fear just evaporated.
And that's why you get that violent move upward. The probability of success just jumped, significantly in the eyes of the smart money.
I love that phrase, violent move upward.
Yeah.
Okay, let's pivot to what they're actually building. You called it an EpiPen killer. Why does the EpiPen need killing?
Well, just think about the user experience. It's a literal shot of adrenaline.
A big needle.
A big needle you have to jam into your own thigh. It's bulky to carry, and honestly, it's terrifying. There's a very real thing called needle phobia.
Oh, absolutely. I mean, even if you know it's saving your life, that hesitation to stab yourself is real. I've heard stories.
And that hesitation can be deadly. In anaphylaxis, seconds matter. So Aquestive's solution, Anaphylm, is completely different. It's a sublingual film.
Sublingual being.
Under the tongue. Think of a Listerine breath strip, but it's about the size of a postage stamp.
Okay.
You just put it in your mouth, it dissolves, and it delivers the epinephrine directly into your bloodstream through the tissue in your mouth.
No swallowing or anything.
No swallowing needed. And crucially, no needles. No bulky device. You could carry it in your wallet.
That sounds infinitely better.
Yeah.
But this is where it gets really interesting because they aren't the only ones trying to kill the needle.
Right.
There's competition.
Right. You have to talk about ARS Pharma. Their ticker is SPRY. They have a product called Neffy.
Neffy. And that's a nasal spray.
Correct, an epinephrine nasal spray. And for a while, Neffy was kind of the darling of this space. It makes sense, people are used to nasal spray.
Yeah.
But there is a specific medical nuance here, a competitive edge for Aquestive, that this AdCom waiver really shines a light on.
Is this the congestion concern I was reading about?
It is, and this is so critical to understanding the whole trade. Think about it. Anaphylaxis often comes with respiratory symptoms. Your nose might get stuffy.
A really stuffy nose.
Exactly. So if your nose is completely congested during an allergic reaction, which is common.
Can you trust it?
Can you trust a nasal spray to deliver the full life-saving dose?
That makes total sense. If the road is blocked, The ambulance can't get through.
And Neffy faced huge pushback from the FDA on exactly this point. They actually got a rejection letter where they had to go back and prove it works even with a stuffy nose.
But AQST's film goes in the mouth.
Right, under the tongue. Doctors generally trust that route more for consistent delivery because it's way less likely to be blocked by the symptoms of the reaction itself.
So the FDA skipping the AdCom might be an implicit signal
That's the read-through.
that they don't have the same reservations about the firm's delivery method.
It suggests the congestion concern just isn't an issue here. It de-risks the science, not just the regulatory process.
Okay, so clear path to approval, product potentially works better.
Yeah.
Now I want to talk money, because even with this huge jump, the analysis suggests this stock is still cheap.
This is why we have to put on our valuation hats. Let's look at the market caps. After this jump, AQST is valued at roughly $360 million.
Okay, $360 million. In the grand scheme of pharma, that's small.
Tiny. Now look at ARS Pharma, the nasal spray guys.
SBRY.
Their market cap is over $800 million.
Whoa. Okay, that's a massive gap, more than double.
It is huge. And here's the logic from the report. If AQST's film works as fast as a shot, and it avoids the congestion issues of the spray, why is it worth less than half of the spray company?
It's a really good question. If the product is arguably better, the value should at least be comparable.
That's what traders call the catch-up trade. The argument is that AQST has a potential 2x upside from here, just to reach parity with its peer.
And what about traditional metrics, like price to sales?
Currently, AQST is trading at roughly 6.5 times sales. And remember, they actually have some revenue from a manufacturing business, which is good.
Right.
But in biotech, for a company on the verge of a major approval like this, peers often trade at 10 to 15 times sales.
So by almost any metric, the math says it's undervalued.
Historically cheap, yeah. It suggests the market hasn't fully digested this de-risking event yet. It panic bought, but maybe not enough.
Okay, I'm getting excited, which is usually my sign that we need to pump the brakes.
Fair enough.
We need a reality check. Everything sounds perfect. What goes wrong? What are the risks?
Never a straight lineup. The biggest one is the boring but critical financial reality. Cash burn.
They need money to keep the lights on and launch this thing.
Exactly. AQST does have a bit of a safety net. They have a legacy manufacturing business that brings in about $50 million a year.
That's great.
It keeps the floor from falling out. But bringing a new drug to market, hiring sales reps, that is incredibly expensive. They are still burning cash.
So if the stock price is up 40% and you know you need cash soon, if you're the CEO, what do?
You raise money. It's called an equity offering. With the stock price this high, management is very, very likely to sell new shares to raise capital.
Which dilutes the current shareholders.
Right. Your slice of the pie gets a little smaller. Usually when a company announces an offering, the stock price dips a bit.
But it's a necessary evil, right?
Yeah.
You need that war chest.
Yeah. Absolutely. Long term, you want them to have the funds to market the drug properly. But short-term traders need to be aware this rip could be followed by a pullback if they announce a financing deal.
Any other risks? I saw CMC mentioned in the report.
Ah, yes, CMC. It stands for Chemistry, Manufacturing, and Controls.
So basically, can you actually make the product consistently?
Exactly, at scale. And making a film is much harder than pressing a pill. You have to ensure the drug is distributed perfectly evenly across the sheet before you cut it.
If one strip has too much and the next has too little, that's a disaster.
A total disaster. The bear case, the scenario where the stock goes back to $2, usually involves the FDA finding some technical issue with the manufacturing process later on.
So not a done deal until the ink is dry.
Correct. The AdCom waiver is a huge green light, but it's not the finish line.
All right, let's wrap this up with a verdict. If I'm looking at this today, based on the analysis, what's the bull case? What's the dream scenario?
The bull case puts the target somewhere between $8 and $12 per share.
That's a double or triple from the $4 level.
Yes. In this scenario, final FDA approval goes smoothly. AQST captures a conservative, say, 5 to 10% of the massive epinephrine market, and maybe they announce a partnership.
Like a big pharma company stepping in.
Exactly. A Pfizer or a Novartis buys the rights to sell it. A deal like that comes with upfront cash and royalties and would send the stock soaring.
And the bear case.
Yeah.
The nightmare.
The bear case targets $2. That's where the FDA finds a manufacturing issue or management dilutes shareholders too heavily at these levels and just kills all the momentum.
So the range is 2 to 12. That is quite a spread.
Welcome to biotech. But the synthesis of the analysis is that the AdCom waiver was the starting gun. It signals the probability has shifted heavily toward the bull case.
In the immediate term.
The analysis sees a repricing toward the $6 level pretty quickly as the market gets comfortable with this new reality.
So let's recap for everyone listening. We had a massive fear event, the AdCom, that just got canceled. The timeline is accelerated. The fear is gone. And we're looking at a product that replaces a scary needle with a simple dissolving strip.
And it connects the dots to a valuation that, frankly, doesn't seem to make sense compared to its peers yet.
It really is a classic example of how something that sounds so dry on paper, a regulatory notification, translates into a massive financial opportunity.
It is. It's the difference between reading the news and understanding the news.
Yeah.
Most people saw the headline and scrolled right past.
I want to leave everyone with a final thought here. We talked about the EpiPen killer, but think about the psychology. We live in a world dominated by giants like Mylan. The needle has been the standard for decades.
It's deeply, deeply ingrained.
Right. So here's the question. How quickly will the market actually embrace a postage stamp cure over the, perceived security of a needle? Is the market underestimating the psychological comfort of the old way?
It's a great question. Does the pain of the injection somehow signal safety to our lizard brains? Do we trust it because we feel it?
Is innovation actually enough to break a habit that is literally about life and death?
That is the multi-billion-dollar question, isn't it?
That's something to think about. Thanks for diving in with us.
Always a pleasure.
Don't forget to like, share, and subscribe for more.